morning to all traders and welcome to this week's first market insights video provided to you by Orbex. That here. We are, of course, on the first day of the week today. As I mentioned last week, I was very focused on the gains delivered by the US equities and particularly from the NASDAQ. I mean, we all do know that there is certain companies, their stocks who have the corporate earnings that delivering good reports. Netflix is doing great, which is in general supporting the US equities because there seems to be a very big disconnect between what is really happening in the economies and the economy, specifically in the US, and what's happening in the stocks. Stocks are rising, even though we had like over 20 million people now losing their jobs on last Friday. That poses to me a very, very big question. How long are equities going to continue soaring for? But in my opinion, that is not going to last much longer. At some point, they will have to all get back to balance. Okay, now for this week, of course, we need to also focus on US-China trade talks and Brexit talks restart as well. But on the first, we also need to look at China from as a benchmark, right? Because now economies reopen. That seems to, the new data from coronavirus suggests that that wasn't a good idea. We're still seeing some increases in cases in different areas that have reopened. China is also been reporting some increase in numbers in Wuhan specifically. So that all brings more uncertainty into the gameplay. So I think with today's economic calendar looking a little bit light, markets most likely focus on the opening and risk sentiment is likely to be set from tomorrow onwards, maybe even overnight. I want to start with the NASDAQ, of course, because we've seen it increase in like 6% since last week, okay, from that was last week's close pretty much. I mean, we still moving exactly as we expected. Now on that B wave, okay, seems to be a little bit deep. We are very close to the all-time highs, okay? That was at 9.974. We are now at 922 nearly, right? Now, this is an ABC to me, and with waves 1, 2, 3, 4, and 5 actually completed. Wave 5, this is an ending triangle, 1, 2, 3, 4, and 5, right? Now, this overlap over here seems to be like the fifth wave, which is usually, you know, overextending a bit, creating an overthrown. This is what is called. And then we see a sharp decline. Although it looks like it from a structural perspective, right, it could be a case where this is 1, 2, 3, you know, this is like 3, 4, and 5 in the smaller degree, which means we're going to get another move to the downside for an ABC, and then we're going to move again up to take out wave 5 of the minor degree, right? So we just structurally, we just assume that there is another smaller degree wave over here, right? Which is where this move actually belongs to. So in either case, that looks like it's going to be more downside. However, what I want to do quickly is just look at the levels a little bit, okay, because we seem to have the 1.61 extension actually showing a price of 9.9432. So we could get wave 5 actually reaching that before we start moving lower. In case we break above that level, most likely looking to go to fresh highs, right? But as you can see also on the RSI, at least in the short term, we can expect markets to decline a little bit, probably to the 9,000, and which is a strong support. And from there, we can actually receive at least further close. Now, the US index basket of currencies, the pattern here becomes a bit more complicated, okay? We've been talking about this move being 1, 2, 3, 4, and 5 for a primary wave 1, right? Because we have primary wave 2, then 3, 4, and 5, right? Which is more downside. But it seems that we are stuck in this correction now, right? So I was looking at this becoming a wave 4 up here, and then 1, 2, 3, 4, and 5. Okay, and I mean, that still can be the case, but you know, these are quite corrective waves, all of them, including this last one, and these make me think that we might start seeing these becoming a little bit like I mean, a Z, you know, a complex zigzag, which means there will be another X down here and a Z over here, right? And that would be wave 4. This would be a triple zigzag. And I only say that because this wave indeed was corrected from the beginning. We can still make it an impulse with this structure, but this over here doesn't look impulsive at all, right? Now, since that doesn't look impulsive, then this one has to also turn corrective, which would suggest that we're going to get an ABC. I mean, this could probably be just the A. We could get the B down here and then C up there, and that would end wave Z as well. And from there, we can start looking for prices to move lower. Now, on the upside, we can go up to 101.09 previous high, right? That is zero waves 1 low in order to invalidate if we go above that. Now, on the downside, if we cross below the 98.65, I mean, I'll be honest, if we just cross below this previous low over here at 99, most likely we're going to continue lower without doing wave Z, which means that, well, this is indeed an impulse wave to the downside, but I would suspect that we're going to have a multi-structure move over here, and that would take us down to the 98.70, which is the 100 Fibonacci extension. I do, however, see on the RSI, in the short term at least, some more upside, and that would suggest that we could get back to the 100 level, okay, take that out, and then move lower as a test on these very, very round psychological numbers are very important.